Good day, folks, and welcome to another episode of the weekly breakdown. So, we are going to be talking about everything that happened in the just concluded trading week. We are going to talk about how our weekly outlook played a role in the way we saw trades, the way we fine-tune our trades for this just concluded trading week. We're going to be talking on the DXY, the EURUSD, and the gold, that's the XAUUSD. So this is the DXY chart, and for the week, let me clear this off. This is not there for the week. We were looking at this particular target. Let me go to the weekly. We were looking at for this particular target for the DXY, and I didn't give you this, but my eyes was actually fine-tuned into this particular CB to be tagged in, taking out this particular high on August 5th, 2024. So I wanted the way to tend into that. So that was my target. I'm not telling you after this, then I said, no, this is not the purpose of this video. So I was expecting this, and the week has been actually big in the sense that all of our targets were actually fulfilled during the week. What we anticipated for the DXY, what the things we anticipated for the euro, and what we also anticipated for gold. They were actually fulfilled during the week. So, and I didn't give you a particular weekly outlook during the last weekly. I didn't give you a weekly outlook for the pounds, but actually we are going to also go through it today. So for the DXY, I was anticipating this. I was expecting, okay, Monday will provide the low, Monday or Tuesday will provide the low of the week, and then Wednesday, Thursday we gravitate there, maybe enter there, and then Friday maybe Thursday, Wednesday, Thursday we provide the high of the week, and maybe Friday we just close below the high. That's all my targets. So going by that, going to the daily charts. This was Monday. It was just straight off to the races. The market opened on Monday, then it started going, and we kept on going. There wasn't really like a week here. The open on Monday was also the low, so it wasn't really like any low down, any week down before going straight. It was just this week was just straight to the target. So what I was just anticipating was just longs for the days like throughout the week until we take out this and then maybe gravitate a bit somewhat into here. That was all I was anticipating, longs for the week on the DXY. So, and if you're a beginning trader, the best advice is just follow your weekly order flow. If your weekly is pulling you to, okay, we are seeing longs, we are going to be seeing longs. Once that to a particular liquidity target, once you get to that liquidity target, stop. It saves you stress, it saves you headache that way. You don't have to trade every single trading day. You just have to just know when to pick your battles. Pick your battles when your own suits, the way it suits you, in your own battleground, with your familiar weapons, with things you're familiar with. Don't just be a machine gun and just be spraying everywhere. Know the battles to pick, know the trades, know what you anticipate, play it in your head as how it's going to happen, and then if it happens that way, then you're fine and good to go. So the DXY, so I was just anticipating going longs, like longs on the week. I'm not trading the DXY, but I use it for my analysis. So I was just anticipating the dollar going up for the week. So if I was anticipating the dollar going up for the week, what would I be anticipating on the euro that way? For the euro, I'll be anticipating, there's a British pound, 1 the euro, for if I'm anticipating the dollar going long for the week, I'll be anticipating what? For the foreign currencies, shorts for the week. So I anticipate they going down for the week if the euro is going up. So with that being said, we have like a target for the euro that we're anticipating, this particular low. And let me bring the weekly charts back side by side. The weekly chart side by side, taking it back, actually gave you this point. I knew we might not get here now. We may or we may not ever get there. That's something for another video where we talk about the weekly outlook. So, but I was anticipating this particular low to be tagged. This particular low was my anticipation for the euro. This particular low, 1.08814. That was my anticipation that okay, we are going to see this get tagged. The market will just run there and breach straight through. That was my anticipation. And as you go to the daily, you're going to see why. And this was it for the dollar. So going to the daily, you saw from Monday it's just straight off down for the euro. Let me make this bigger. This is just the euro chart here now. So it was just straight up to take out this IRL, internal range liquidity, of this particular leg. This is one low, another low, sell-side liquidity, they are all abound here. So this particular sell-side liquidity for it to get taken out. So that was washing down. If you look at it very well, this Tuesday they didn't take it out. It was Wednesday that they just breached through it. So with that being said, I was anticipating this particular low to be taken out for the euro for the week. So every of my trade was hanging on this. And then I look for more sells. Reason being, on Wednesday the dollar just pinged this particular buy side liquidity. The dollar just pinged it. So I was anticipating maybe a push up more on Thursday for the dollar. And since I was anticipating a push up more on Thursday for the dollar, so I was anticipating a sell off more for the euro on Thursday. So it's that. That was what I was anticipating. That was why this was also in the work for me. I anticipated this also. So with that being said, let's go into the hourly. Let's go to the 4 hours so we see how we just moved. So Sunday evening that's every time I'm looking using New York local time. So Sunday when market opened up with straight selling down, and then retracement, more sales, retrace, more sales, retrace, more sell-offs, then retrace, more sell-offs, retrace a bit, sell off, like that. That was it. So we're going to go to the 1 hour, and then I'll start showing you price point where you can anticipate trades for the 1 hour. Good. We have this target, this weekly target, which is also a daily target for the euro. We had this, and since we had this, when the market opened, I was expecting this particular move. We have seen it time and time again. This is something you should even target. This should be like, okay, if you are taking a trade here, this should be like TP1, this particular point, because we are gravitating towards it. So this will get smoked. So all this anticipation, all this leveling up is just a retracement move for more sell-offs. And it even gave more opportunities. It gave more opportunities to enter the trade. In the sense that if you have to get your pathway and then say, okay, yeah, then this didn't get up to it, and then sell off. This should be like the retracement leg, then more sell off. Then this should be the retracement leg for more sell offs. It's that simple. With this being it, like trend, if you are following something that is a trend is your friend. If you put your fib on it, your fib retracement on this is where I draw mine. This retraced to above equilibrium to enter premium. This is, to me, still a very good and a true retracement. A retracement that does not get into premium, if it's for sellers, a retracement that does not get into premium is not a true retracement for me. And a retracement, if it's for buys, a retracement that does not enter discount is not a true retracement for me. So for this sell-off, this entered into premium. If you are to look at this trade, fine-tune more for this trade, going into 5, let me just highlight it down and then we'll all go back into it. So this particular price point is 1, where we could have considered taking sells. From this particular high on Monday, down to that same Monday, we had another opportunity during New York session. This was all during London. We have another opportunity during New York. All this down here is another leg. If you go to the lower time frame, you see it clearly. And this particular push up by this particular one candle is the retracement for more sell-offs to go to the sell side liquidity. So with that same vein, this also enter premium. With that same vein, that is also another price point to most likely be checking out again. And then from here downwards, that's also a leg. And then if you put your fib on it again, from this high to this low, if you put a fib on it again, that's also a leg. But now market close, and then I won't be taking anything here. Market closed for here. So all this no for me. All of this is midnight. I won't be taking any trades. So I won't be tagging here for any trades. Look at where I tagged here. This 9 a.m. Here, this is within London session. This is within London. Now, after this, we almost got to the weekly target. And then if you go back to the daily, the way we said it, if you go back to the daily, you're going to see that particular price point that will be marked out, this particular sell side liquidity. That's what we're anticipating. Now for the 1 hour, we almost got there. We almost got there. We almost got so close. We were so close there with this. We were so close to it. And the two ideas that now came to my head was, okay, should we be seeing somewhere around here? Maybe they'll just retrace into somewhere around here and then sell off to hit this. Well, as the market will have it, they just breach through this particular fair value gap. I was actually looking at this CB at first that okay, maybe we'll see something that might tag me into a trade to just sell off there. But they just breached through it and then they came for this. They took out this buy side liquidity, this IRL. After taking out this buy side liquidity, this to me became a turtle soup. I was anticipating, oh, we shouldn't be seeing more highs. This is the target I was expecting. So all this became a turtle soup. For newbies, they'll think, oh, this is like a break of structure or a shifting market trend, and then one disanticipation. Well, all this when they see it, they'll think, okay, more highs and then something like that. No, that's how it works. So when I saw this, I was all stuck to this, looking at it, saying if I can see something here. But when I didn't see it, I was like, okay. And they came all the way out here. this became something that I anticipated immediately. I started anticipating it and looking for, okay, how can I tag myself into here for down moves to this target? And look at this, they got close to that on Tuesday too. They didn't take out this. They got so close to it. They are taking it out, and then you saw another retracement leg. All this retracement leg, all of this particular retracement leg. If there was no time for me to trade, because here this is midnight, this is market close and then midnight. All of this would have been more anticipated with this. Even during midnight, it works. ICT has performed wonders in this market. You check him out. He is very good with teaching. And like I told you before from my very first video on this channel, I'm not here to compete with any trader. I'm just here to just share my ideas, share my weekly breakdown. If you don't feel like you like it, it's alright. I'm not here to compete with anybody. I'm not here for the dick battering, the dick slamming that they keep showing on. X, things like that, comparing everyone to each other, fighting this student claim this. Just do what works for you. That's what I believe. If a particular strategy works for you and you master it very well, you should use it. You use it. ICT works for me, and I master it, and I recommend it because it works for me. That doesn't mean I must force everybody to just say ICT is the only way. No. If you feel support and resistance work for you, if you feel any other teaching works for you, it's fine. So this is my own idea. This is the way I look at it. This is the way I internalize it, learning from ICT. So mine was attuned to this, but when market closed there, I was like, oh, that's all a bust. You might say something like this again, maybe something like this. So there was no trade for me here. So immediately, and then waking up to see all of this became like it for me for Wednesday. I was like, okay, I don't really want to participate in anything. But the only reason, the only thing that made me participate on Wednesday was DXY. Going to the DXY chart. Going back to the DXY chart on Wednesday, before all this became here. On Wednesday, let me take it to maybe 1 hour. Wednesday, sorry, I'll adjust it now. So going by that, the DXY hasn't yet reached that liquidity point, that buy side liquidity. On Wednesday, it hasn't. So since it hasn't, I was like, okay, maybe there's still room for more longs on the DXY. So I was anticipating a sell-off here again. So, but I was just a bit guarded with it in order not to risk much. I was just anticipating a sell-off here to go down more. Maybe just look for this. Look for when I saw how they were reacting inside this fair value gap, and then it was making it. I knew it was going to be invalidated. So all I was just looking for, okay, let's get this low. If we get this low, you have to be nimble in these kind of situations. Just look for the obvious liquidity target, the low hanging fruit, take it and leave. They have already taken liquidity. Anything can start going wrong. So, and when we get to the gold analysis, you are going to see lots of crazy things. So they have already taken liquidity, and since they have taken it, that was it. So since that was it, there's no other cause for fretting or anything. This was just it. So immediately I saw this, I left. And then all of this, I didn't participate in any of this. On Thursday, I even knew that DSY should even move, and then I was expecting more of that. I didn't participate. This is the news. And obviously I'm not participating. Immediately they call the news. So and then I shared And Friday, I actually anticipated that we were going to like see like a relief in terms of the foreign pairs at least going back up, like a relief. Like after the whole shed Monday to Thursday, I was expecting maybe a relief. So all of this, I was anticipating this, and even going into the next week, I'll be looking out for this. That's just a sneak peek. I'll be looking out for this because I'm expecting this particular fair value gap to be invalidated. You have entered it, something of this nature. Okay, look at this, made this, then went down, then okay, with this, worked all the way, then we came to somewhere around there, and then just made something like this, and then we're still going more. I'm expecting most likely this buy side, they'll get it. So that's just like a sneak peek. Surely they should get this, but I'm not the market maker, I'm not the one printing the candle, so they don't get it. It is what it is. The market is still present me data for some other sweet things. So that was it. This was just the way I internalized the XY. So I'm also going to put like one here. Oh, what did I do? I'm also going to put one here. So it's not like I'm following a particular script in order to teach, in order to just bring this out now. I'm also going to put, so all these are like the interest points that are during the week. All these are like the interest points, and you're going to see them as we go on. So let's break it down to the 5 minutes now. I like going to the 5 minutes, sometimes 15 minutes. Okay, let's go to 15 minutes. But I love the 5 minutes so much. Sometimes I just take my trades there without fully caring about anything. Okay. Going by their nature. The first point here, yeah, I think I tried this trade on the 5 minutes. This is the 15 minutes, and these are ITs. Entering all of these entries, all of these anticipations, and then all of that. These are just in the 15 minutes. Going to the 5 minutes. Going to the 5 minutes, the 5 minutes. Okay, sometimes this thing just gets, you just get away from it sometimes. Okay. Okay. Going by the 5 minutes, yes, I think I took this here. I was watching it, then spread made me get the entire. So going by this, on our, this was the focus that we should start seeing low prices after getting here, right? Since we should start seeing low prices after getting here, there's a particular BC here. There was a particular BC here, this particular one, this one here. And let me make it bigger. It's not be like I'm talking only to myself. There's a particular BC here. You can go back to the charts and check it out. There's a particular BC here. If you ever look at that, in beginner trader, we think, okay, that has just head of fair value gap. We just think, oh, this is a big ass fair value gap. It will just retrace into it, and then we go for more. So that was it. That will just go in here, and then we start jumping up again. So that was just that. That's just it. That, oh, you just retrace inside here, and then we go for more. That's what they'll think. But with this being said, tagging with the higher time frame. The higher time frame is actually showing we should say this coupled with our weekly liquidity target. All of this is showing we should go down. So I was expecting this to be invalidated, but to now really confirm, that I was expecting it to be invalidated, I'll wait for this particular BC, this particular candle that the BC is anchored to. You know, what forms the fair value gap is this 1, 2, and 3, and then this space. This particular candle that the fair value gap is I'm called to, I'll wait for it, the low of it, to get taken out. So when the market was dragging all the way, I was still waiting. I knew this was going to be invalidated, but I was waiting. I'll wait for it to get taken out. This is like an added confirmation for me. I'll wait for it to get taken out, then retrace into the IFVG. They call it an IFVG. Retrace into the IFVG. After retracing into the IFVG, and this was now so sweet, it was also paired with a CB. So if I'm to clean this off, this was also paired with a CB. So retracing into this, you could have taken a trade here, put one here, put another one here, put another one here for a shedding down. The shedding down all the way. That's one. So you might just want to pay your liquidity target to be here. Just put it there. So from here, stop loss for me. Yeah. Stop loss for me was actually here. It was actually here. I was being a bit conservative. So it was like a 6 pips stop loss. It is there to me when I was really aggressive in stop loss placements, which I don't really advise for anybody. My stop loss placement would have been here. Like, okay, if this CB gets invalidated, then most likely I'm wrong with the trade, and then it should just take me out. So it's fine. But this is where I placed the stop loss. This was it. This was where I placed it for this. And the shedding down. This was the first target. So, and then after that, I was like, okay, being skeptical a bit, and then I was like, okay, this other part, good. This other part now, let's talk about it. This other part, the first support structure for me, this first I use support structure. The first thing I'll be anticipating is, okay, this particular retracement, this particular tower, there's something I would have called it, but it's a sense of this particular tower. Then all the way down again, all the way down. So take out this particular fair value gap. Yeah, this particular big fair value gap, all the way down. Immediately, the same idea that would happen there. BC that was invalidated, retrace into anywhere, retrace into it. So all of this, I could have placed a trade inside here, here, added more here for that low. What particular low? That first target. Let me make this the euro, and let me now put this way. For this particular first target that we had, this particular first target, these are weekly. This is the first target that we had. This last week low. So that would have just run nicely there, all the way there. But the stop loss here would have been a little tricky in the sense that what if it has retraced all the way, maybe somewhere around here. So stop loss, I would have won. I actually placed it here. That might not be optimal for you, but left to me 9 is still better. 9 where I placed trades at 14, 15-ish. This was here. So 9 with that, and then this. It was here actually. 2, 5, 15. That's 10 pips for roughly 15 pips. So you might say, oh, the RR is small, but I love it that way. So that was for this. That was for this particular trade to target this, and then from there, I told you I couldn't get this particular one. I couldn't get this particular one. This was night, stroke midnight, so I couldn't get this. So yeah, let me now first talk about this that I was anticipating but couldn't get. The next one I was anticipating but couldn't get was this. I was anticipating, okay, maybe you just retrace into this, maybe a CB in here, this or somewhere around here, and then we'll give up the ghost. All these price elements, they will get taken out. All this buy side liquidity, this high, let me open it back up. This particular buy side liquidity here, this particular high, this particular one, this particular ones, they all get taken out. So that was my anticipation, and then maybe we'll depreciate and then we'll slam home and take the win. Yeah, but that wasn't what happened. So since that wasn't what happened, first and first, I actually took a trade. Yeah, I actually took a trade and had break even. It was, even if not for aggressive stop loss management, I would have had a loss. It was that. So I was anticipating all of this. When I saw this on the 5 minutes, I was anticipating all of that, and then I break my own rules. I was anticipating this CB on the 1 hour, and I saw this, and then I saw this particular fair value gap was getting invalidated. I started thinking of, let me just ping the trade inside it. So I took something here. When I took something here, I was seeing little profit, stop loss was here, seeing little profit. I was a bit aggressive with it. I started seeing this all going. So I was like, okay, maybe we'll just slam this straight. That was all I was anticipating. Slam it and then make something. So I was like, okay, that was good. I was enjoying it. And then suddenly, when I first saw this particular candle, I wasn't really scared. I was like, okay, maybe we just enter the CB. We trace into the CB and then go for more. Well, immediately got invalidated. We went up. We didn't take out my stop loss and then we retraced down. I knew this was not valid anymore. Since this was all valid, I closed. I think I took a little, very small loss. Yeah, I closed here, and then I saw things like this devolving. So I was now waiting for, okay, let me now follow the rule I made. We came all the way here. There was no element for me to pick up sales. You see, we slammed it, we went up. So this was like closing with a small loss here, a no for me inside here. And I entered this beautiful one. Entering this beautiful one, I was like, okay, we should start saying beautiful things. We retraced the bit here. We made a new high. Then we retraced all the way down into this particular PC. And then we tried making new highs and then we couldn't. And remember, this was my target. We couldn't. And remember, this particular point, we were expecting it for the torso soup. And the 1 hour. You can go back to the video to watch that part again. Try making this, we couldn't, and then took out this particular BC here. You see that I'm not really focusing more on this. We have retraced this. This is like shown that it wants to go up. So we retrace this. Here, I was anticipating this to go down. But I didn't just rush in taking trades here. I waited until they invalidated this. Immediately they invalidated this. Looking at this, I would have wanted to take a trade here, but look at how it all evolved. We made a high. We retrace down. Instead of making new highs, we made a failure swing and then took the price move out. Immediately taking that price move out. Look, this is a retracement leg. This is a retracement leg, and since this is a retracement leg, the last two order block. So going down, retracing into it again for more lows. Now for more lows, I was actually anticipating. Yeah, this is where my trade developed. I was actually anticipating. Okay. So I think I took it inside this particular fair value gap because that was like the only anchor for me. Inside this particular fair value gap, my stop loss was a bit higher up here. So, and then I started seeing this. Immediately I saw this, and then this. I was like, okay, this is nice. This immediately took out this. I placed my stop loss here, and then we started making this. So immediately we started making this. I was like, okay, this is getting sweeter. And then we started making this price move back. When we made this price move up to this with this big, I chickened out. I'm a seasoned beginner. I chickened out. I just closed. And the reason why I chickened out was I've always had experiences trading things like this. Where if you go back to the 15 minutes, all this price level, they will just retrace it, make a new high. It's until when they make that high again and they break it off, that's when you now see that price moving there. So going to the 15 minutes for that particular point, if you put your fee ball on this, if you put your fee ball on this to this particular high, this was it. They retraced into discounts. This was all retracement into discount. This wasn't just to slam this. So it's all retracement into discounts. Made a new high with this. So here would have been a solid TP1, but I was thinking it should have even gone lower. So I didn't take most TP here. It was when it almost took me out. That was when I stopped. So, well, this could have been a trade, but this is my weekly. I love following my weekly. So now let's go back to the 5 minutes. So the beloved 5 minutes. I think so. Yeah, sorry. So after I chickened out somewhere around there and quickly rushed and closed it, I saw this because I break my 3 minutes before. When I saw it on the 15 minute that way, and then this I closed. So I made very little here. But going back up, they went all the way back up, and then I was now like waiting, okay, this will become my point of reference, this particular low. If they come back and take out this particular low, I'll be expecting maybe a shutting down. So they came out, take this particular low at New York launch, and there was even nothing to even tag me with this. So I just watched all these drops till we got here again. This was where it started pissing me off. We got here closer the first time, so it wasn't as pissing off as till we got here again. Getting here, and then all of this price move till market closed. So I was like, okay, jeez. For now, so I'll explain it more. This particular fair value gap, let me make it better. This particular fair value gap here. If I was anticipating the DXY to go up, and so if the DXY goes up, definitely in my market dynamics, I'll be expecting the euro to fall. And since I will be expecting the euro to fall, and the rest to fall, so all I'll be anticipating is this particular BC fails. That's all I'll be anticipating. This particular BC should fail. So I'll be waiting for the low of that BC. This particular BC failing. Going to the lower time frame. Going to the 15 minutes. For that particular friendly BC. This is it on the 15 minutes. This is it on the 15 minutes. And then to fine tune it more, you go to the 5 minutes. Going to the 5 minutes, this is the big bad wolf. They would have been anchoring everything on. Big bad wolf. See as it's being fine tuned here. So since this is a big bad wolf, I'll be anchoring on the 15 minutes and then anticipating failure. All of this immediately we retrace there first time. All I'll be waiting for is for this BC to show me that we really want to go down. The low must get taken out first. That's it. The low must get taken out. And then I was anticipating this, but I didn't work with this trading. I was so much confident that we might see lower prices. So more confident that at the end I didn't follow this. I eventually, and this was the sell side I was waiting for. I eventually followed another plan. Another plan in the sense that I saw this and then we made a new high. When we made this new high, I counted all of this as the retrace. This particular leg down was the retracement of this price leg. Really, that was the retracement, and then we make a new high. This, if we want to continue uptrend, we shouldn't be seeing lows. The low should get protected. So immediately they came back for this again. I was counting on, okay, this should fail. This should hold us, sorry. They should hold us, they should get protected. The high of that CB mustn't be taken out. And then this particular BC that they form should fail. Let me say it again. All this leg, if I draw the path from here, this is the retracement, and then making new highs, and then taking out the high, retracing, and then I was expecting something like this. That was it, coupled with this as a liquidity target. So they entered the BC, made a new high, came back into the BC. Coming back into the BC, the first thing that will tag me is, okay, this CB mustn't get filled. Good. And they fulfill that. They enter this CB. They didn't go above the candle that formed it. The candle that anchored it. So that's the valid. This BC, they must start working their way and make this BC, this particular one here. This particular one. They must make it fail. That's why going below it here. Going below it here. They must make it fail. So that's another one. And when they did that, let me clean it. It's getting too much. I have to clean all of this. Clear all of this. It's getting colorful. So immediately they did that. With this candle. All my targets was retrace back into this. This was a 1 minute trade. This retrace, go down, retrace, then retrace, then more lows. It was that simple. This was a 1 minute thing for me. This particular one was my order block anchoring. I expect them, after they have taken out this BC, I know they are going to come for this. I'm most likely coming for this particular lows. So I didn't work more with this. Again. And I anchored my trade all on this. If you map this out, this is my order block, my bearish order block. So I don't know if they call it a proportion block or something, but I'll just stick to order blocks. You can call it any name you like. I'm just a newbie. So this was it. They retraced back into it to fulfill the premium PED, premium equilibrium discount. This retraced into premium. Let me clean this so you see it well. From this high to this low, all this retracement back is into premium. So that fulfilled that with the other block, and then sell off. Straight sell off. First TP was here, and then I waited for this and this. That was it. That was all I was looking at here. And immediately I got that. And then DXY also made its play that way. I was like, okay, that concludes like my weekly target for the euro. That concludes my weekly target. That concludes everything I've been anticipating for the euro. So this, I didn't participate. This, into the news, I didn't participate. all of this, even this Friday, and even though I knew there was going to be like a relief, and this is something I could have taken, but I didn't participate because I love following my weekly so much. I don't want to get into a situation where I have to blame myself. If I now go against what my gut feeling, what is so clear to me, if I go against it and then I make losses, that's foolish. It's better I know that I make losses from going with what my gut is telling me, going with what I really feel should happen, having a play, even though I make losses from it, than just blundering in because, oh, I want to see opportunities, I want to prove that I can see the market way more than this person. I don't care. If you can see the market way more than I do, it's fine. Because the ultimate end goal is to make money. So all of, and this one is better than this one is better than this, I don't care. I've never cared. All the arguments of, oh, this particular person, this particular mentor, this particular guru, this particular fool, or whatever they call them, I don't care. It's all egoistic. Oh, I want to show you I'm better than it. No, it's not my concern. That's why the main description of my channel is from a seasoned beginner. I value myself as a beginner. I can learn from anybody, and if it will improve my trading, fine and good. I love it because I want to make money. That's the only goal. The only goal, to make money, to live comfortably, make money. It's not to prove to anybody. I don't care. So that's just the breakdown for the euro. Then straight to the pounds. It's almost like I'll be really fast with the pounds. Oh, it's on the one now, sorry. For the 1 week now, for the weekly, this was just it, straight down. Dollar should go up, foreign currencies down. This was the sell side target. This was really, really clear. Like really, really clear. This was really, really clear to see. So with that, going to the daily, going straight to the daily, I was expecting something down from, but I was actually taking more the sales on the euro. I won't really be focusing on sales on the pound because to me I still believe the pound was still a bit stronger until all these crazy things. So I wasn't really joining sales on the pound, and it was the news that caused this. So news event that caused this. So I wouldn't have been taking shots on the pound for anything. So that was it. But this sell, and then went by the 1 hour. I didn't really focus on pound on the 1 hour. So all of this, I wouldn't have traded this. This was crazy. Even up to this particular Monday, I wasn't really trading sales on the pound for the past few weeks. Now Monday, so now. So that's for the pound. It was clear to take out that liquidity target. So for the gold now, our target for the gold, after taking the gold target was this particular high. I gave you in the last weekly outlook we did. This was the particular target that was anticipating for the gold, and I think I posted one or two of the gold trades that I took. This was just the target. Oh yeah, just like, oh yeah, just posting wins. If I have losses, I'll post them too. It's just because I just started this YouTube channel. I'm not like I'm a beginner, so you don't expect me to only have wins. And where I made break even, where I lost little, I also showed you. And just say, oh, I didn't lose at all. No. It's cost of doing business. So this particular week I was anticipating this, and I told you, oh, I was expecting this in the market. We should gravitate up to here. Take out this. Good. With that being said, all I just did was go back to my daily. I was expecting longs or shorts. So on Monday, it was a bearish day, but the rest. So I was just expecting everything gravitating for this, everything for this. That was all I was on gold. Everything for this. So going to the 1 hour. Okay, let's go to 4 hours to fulfill our righteousness. Going to the 1 hour, the market opened here and then I saw the market like gravitate down. That was the Monday, and then started seeing price shifting back up. All of this, there are plethora of trades here. Plethora of trades. There are trades that even should have left for longer. So Sunday when the market opened, and then we saw this. Seeing this, where my eyes was drawn to first. Good. Let me talk about this. Where my eyes was drawn to was this. That was the first thing that my eyes was drawn to. Okay. We have done this. That was my anticipation. We have done this. We retraced and we have made a new eye. So my eyes was drawn to, okay, let's retrace and then let's send it for more. That was where my eyes was drawn to. So, and since that was it, I was like, okay, once we get inside here, I was going to take a trade. And I did, and boom, I got flagged out. On this particular trade. I got flagged out. So since I got flagged out on this particular trade, I then anticipated and waited again. And then I actually saw a beautiful one here. That later developed into making the week even more and more beautiful for me. Okay, let's talk about this. Then I'll map out the next one. We'll talk about this particular point. Then we'll talk about they didn't get it here. Since they didn't get it here, all of this became my anticipation. This particular point actually became my anticipation. I didn't really like it, but it happened. This became my anticipation. I didn't take anything here because I was expecting maybe a rundown of the main inside here, but I didn't get it. So when they didn't get this, I was anticipating that, and then till we eventually pinged it. So that was all it. All of this, I didn't take anything here. All of this I left after we pinged this. I stopped on gold. So let's discuss this. Going to figure out maybe 15 minutes. Yeah. After we played here, what first gave me pause? It's coming in, looking at this low. The low of this particular candle. Let me open it very well. There's the first one. The low of this particular candle. This was a fair value gap that was really anticipating. Okay, here. Okay, they should all deposit here. And this was the point from here to here. From this low. Let me clean this here. From this low to this high, this is inside discount. This is putting your fib, taking it from here to here. This is all inside discount. And since this was all inside discount, I was just like, okay, maybe we'll retrace inside here and then we send it coupled with that. So what particularly tricked me was this particular fair value gap. It didn't get invalidated. The low of this fair value gap was 2647.75, whereas the lowest point they got here was 2647.82. So I was like, okay, since they didn't get it, and then I saw this energetic move, I started picturing, okay, this particular order block or inside here, that's where I'll be taking my trade. But lo and behold, I place my trades there, pull one here, and then book got slammed immediately. So this was really fast. Book got slammed. This was the stop losses. Here, just here, below the order block, both got slammed. Pew. So that was the losing trade. That was it. Book got slammed because I was thinking, okay, here and here. And then I was like, oh, let's see this I first and this and this. So after book got slammed, I had to walk back and pick up the pieces the next day. The next day, my FVG was here, and this was like welcome to Singapore for me. They came all the way here, made a new high. Good, making a new high. I started anticipating, okay, inside here. Then I took this on the 1 minute. I think I took 1 year. That almost gave me the threats, and then I waited until they worked this, but I didn't take any trade here. Yeah, I took 1 year on the 5 minutes. That almost gave me a threat. It was on the 5 minutes, gave me a threat. But here I took a 1 minute that I couldn't get tagged in. So on the 5 minutes, that first trade on Monday, I took it straight on the 15th. The first trade on Monday, it was straight on the 15th. Maybe I'll start taking trades on the 15 minutes. So this particular, yeah, the 5, I can't remember now. This particular trade on the 5 minutes, all these down close candles, to me, they're a one giant order block. So I was expecting, okay, retrace into the order block and send it. So all of this, they retraced into the order block inside this fair value gap. This was where I was anchoring it. And then I also anchored according to fib. Anchored one at equilibrium straight. Then anchored somewhere. I was thinking, okay, this shouldn't be seen. So when we were getting really here, it was, I'm still a beginner. It was giving me like a bit of a goosebump. I would have accepted it if I got stopped out here. I would have accepted it and moved on. I got stopped out on Monday, fine and good. So after that, and then I start seeing this particular one, then gold, being gold, that behaving crazily. So with that being said, I started watching closely here. I took a very small trade here, a very small lot size here. That's what I used here. Very small, because all of this was big for me. That's around 6. So for this. So and then I was not expecting, after this started doing on the CD in the 15 minutes, this is the 5. After this started jumping up and down, bouncing up different, like okay. When they finally made this energetic move, I was thinking, okay, and they formed this particular big candle, I was thinking next one just come and tag inside here. Maybe tag this 3, this particular down, 3 down close candle, make the other block, and then I'll join them. But they didn't. This was where I missed. I think on the 1 minute I tried finding it, I couldn't see it. I couldn't see that trade to enter. So, but the 5 minutes I wouldn't have seen it. So I got a very small one and I took it out here. That was a very wrong thing. I took it out here. Well, it was nice. Making profit is always nice, no matter what, even if it's small. So I took it out there. It was just 1:1 for me. I took it out there. And then taking it out there, I had to now sacrifice and watch all of this happen all the way here, all the way. It is what it is, all the way. And then good. On Wednesday, on big Wednesday, let's go back to the 15. That will clear up matters. On Wednesday, I saw all of this. We almost got there, but we didn't get it, and then we gave up the ghost back. Giving up the ghost back, this was my other block. This was my fair value gap pairing. They took out the fair value gap pairing, but was still anchored on this particular other block. If we go to the 1 hour, you see the other block I'm talking about. This particular 2 down close candles. These 2. Let's stay anchored there. Okay, once you get here, let's see if we see something. So going straight to that, going straight to that. Go straight to that. We entered the other block. Immediately entering the other block, I was anticipating, okay, all of this. Can we move out? Can we see this eye? We didn't. In the sense that we saw this eye, but all what I was anticipating back, I didn't get it. I was anticipating something like this. Entered here, retraced, then new low, and then I wanted something, did it here, and then I was thinking maybe something as low as here for me to send. Oh, I didn't get it. I didn't get it. I looked for it on the 1 minute, I looked for it on the 5, I didn't see anything. And after that Monday, I didn't want to take anything on the 15-minute again. So I didn't get it, I didn't get this, and it would have been beautiful. Could have left it for a while, even retracing it and then waiting for it would have been worth it, but it is what it is. And so I had to just watch on my hands as they did all of this Thursday. Nearly they took that out. It's like really cool. Really cool. They have made it successfully, but I knew they were still going to come back for this. But I didn't know how they were going to engage the marketplace. I'm a seasoned beginner. I am not permitted. I'm not like, I mustn't know every play they have to make. I just have to plan my trades, the ones that I can really figure out, plan it very well, don't make stupid mistakes, and that's it. You don't have to know every price action, you don't have to understand every piece of price action for you to make money. And that's where most suffer from. You learn this, you learn that, you learn a lot, and then you now start confusing yourself in applying. So I knew they were going to come for this. I didn't know how they were going to engage the marketplace. And since I didn't know, I just sat on my ass. And since I didn't know they all did this, did all the crazy things they did, went all the way, and then all of this move, I didn't participate. All of this, I did not participate. It was good, it was great, but I already got my weekly target. So that was it on gold. That was it on gold. I love gold. I still love gold, trading gold, but I got bonds Monday. I made it Tuesday. I didn't enter anything Wednesday. I saw this, I thought I could clear it. I couldn't. You see what I mean? I would have loved this, but I didn't get it. So that was all of it. There's now one thing that I also watched. I didn't trade it, and that was in NASDAQ. I was actively watching the NASDAQ. I don't trade the futures here, so that's why you're seeing this delayed, like I think 10 minutes. I don't have any accounts with paired to my trading view. I just mainly come to my trading view for analysis. So I watched the NASDAQ. I really watched the NASDAQ because I was thinking, okay, what I was actually anticipating was, let me show you. Let's go to the weekly because I saw it all the way from the weekly. It's looking like gold. I'll show you. It's looking like gold. This energetic move, this fair value gap, they retraced into. Let me put gold also side by side. So let's go to gold. Yeah. So you see it's 1 week. Good. The energetic move, the retracement into a fair value gap, and then taking out a new high. Same thing with NASDAQ. The energetic move, retracement into a fair value gap, taking out the new high. I anticipated this on the NASDAQ, so really anticipated it. So if you have to go into the NASDAQ, I just had to watch. I did not trade the NASDAQ. I know that I will then come and tell you, because I guess it then I traded enough. I just had to watch. This was for my learning, but I knew this was going to occur. So going to the daily, so that means what? Till when Monday opens, all I'll be expecting straight run to take out the buy side liquidity. Yeah. And what did Monday do? Monday just went straight. Immediately went straight. I was done. I was like, okay, if I was trading this, this would have been the point that I was done. Although there's still like maybe a liquidity target you can anchor for the week. If you had wanted to anchor something, you have been thinking of, okay, let them invalidate this CB, or let them then run for this buy side liquidity. So, but low hanging fruits, that's always my watchword. So if I was trading the NASDAQ, this is where I would have been done. This I wouldn't have been expecting more longs. I'd have been done with this Monday. So going by the 1 hour, going by the 1 hour, going by the 1 hour. All of this were so close. All of this I knew were going to get tagged. So look at what's before New York open. All what they have been just straight runs. Immediately the straight runs. We just sent it all the way. So I was actually seeing this. I saw it on the 1 hour, I saw it on the 15 minutes. I saw it on the 1 hour, I saw it on the 15 minutes, and it was really beautiful. Really, really beautiful. Seeing this energetic move. 9:30 came in and then straight traces. And then look at this. Like the fair value gap, gave up the ghost, and then crazy things. So Tuesday, when all of this was happening, I was like, okay. But yeah, this is not the main part I want to really focus on. I just showed you that all of this, I was actually expecting this leg to like tag into this big man here, into this big CB on Thursday, because I also watched on Thursday. I was actually anticipating that leg to tag into this big CB, at least let's say run into it. I was anticipating it. So when all this happened, when I woke up and then I saw all this happening, I was like, wow, all this happening into the big CB. So I saw it, I was not like, okay, what are they going to react to the BCB? They react, enter the BC here with this 9. Let me open it, make it bigger. All this ran into the big CB, this big CB entered into the BC, entering into the BC, trying to like go down more, look for more lows. So into a CB again, make a new low. And I expected maybe a retracement getting in, but that was it. And this is even market close. So I just watched the NASDAQ trust. I just watched it, anticipated it, and I used that. I also filed that in my learning process. And I wrote it down. That's the what was so like really helped me. You don't have to just trade it because you know if it's going to go there or not. Sometimes you just have to just watch how price behaves, and then that helps. Mustn't always be, I must take it, I must take this, I must take that. Just find that high quality setup. Even if it's just 1 or 2 in a week, you're done. You're okay. So that was it. That is everything about the weekly breakdown, about the decisions, my thought process, my thinking, the way I was. And you can see all the other short videos that I posted, the things I was typing. You can see a breakdown of a particular trade that I took for the gold, even up to the way I was even telling myself the internal dialogue I was having. So see you next time, folks. Have a lovely day.